What's going on, believers? It's your boy Rebalance with another live price example. I'm not a financial advisor, a licensed investment consultant. Don't claim to be any of those things. Please do your own research. There's risk involved with trading live funds. As always, I want to start with the economic calendar up, just kind of get an idea of what's on the agenda for today. So there's high and medium impact news within 15 minutes of each other, and that's all should be entering the market in the next 20, 25 minutes or so. So I'll just click on these real quick, kind of speak for these first few minutes, and then right around 8:30, I'll mute sound and just write record price, leaving notes, and speed that up with a voiceover later. But again, just clicking through these. If you want to take a quick read, not really my area of expert expertise, to be honest. So I won't be digging too much into what all of these things mean. The biggest thing I'm thinking about currently today, it being Tuesday, May 23rd, 2023, is the debt ceiling and whether or not or when basically they're going to increase it and by how much. They've done it 80 times roughly in the past. The government has increased the debt ceiling, so I'm pretty sure they're going to do it again. I actually don't remember any of the previous times that it happened, and so this will be for me a moment to be remembered, just so for future reference, as well as me looking back in the past and seeing how how those debt ceiling increases impacted the economy. Those are things that I want to go back and study. Actually, I do want to just mention Ray Dalio really quickly. He's been someone who I just like the way that he analyzes information and the way that he shares it. So just dropping that little gem in here really quick. If anybody wants to get an understanding about how history repeats itself as far as ec- economics goes, Ray Dalio is a great resource to look into. But now getting to the charts. So dollar, what I wanted to see and what actually happens are always going to be two very different things, right? And every individual day, every individual session has the ability to change a narrative. That's why I believe I have to be on my toes every day and ready to adapt to what I'm actually seeing as opposed to what I want to see. So I wanted to see was the dollar be held in consolidation this week so that the indices could rally. But ultimately, within the later parts of this week or next week, I did want to see the dollar start to run higher again. What I'm seeing is that it basically began its run yesterday morning, consolidated above the weekly opening price, and then early this morning we were able to push through this inefficiency after we tapped and rejected once, and now it's acting as support while we're inside of this daily inefficiency here, which we right traded lower out of to the end of last week. And so what I'm thinking specifically about the dollar are two things. What are the chances of it still trading lower from this range? Does it need to tap the high end of it first and maybe explore higher than that and then still trade lower? That's possible because on the daily chart, if it trades above there and it then starts to break down and trade lower, that could still leave the daily candle body from closing above it, which would be a concern to me as far as seeing the dollar trade lower at all, but still possible as far as the indices moving higher, as long as there's moments or sessions, if you will, where the dollar is bearish. For example, yesterday closed as a bullish day, right? See an up close candle. Today so far, bullish candle. Even with it closing as a bullish candle today, tomorrow could then provide that consolidation or that bearish close on a daily chart, which could then give the indices some legs to run higher, depending on what news potentially to be a catalyst for volatility. So that's just kind of what I'm thinking as far as like how could my initial plan still play out? Does it still make sense? Right? And so Outside of that, if it doesn't have any down days or any retracements, then above that current, range that the market is finding resistance at and having a hard time getting through, above that is another daily inefficiency, and the low end of that one is 103,958. So, looking to see, is there any willingness to get up there if the dollar can convincingly get through this range here? That'll be just where I'm watching next, right? It could be just a speed bump, or it could be a big problem area that sends price on a deep retracement, possibly a reversal, to start to take out some high time frame lows. This looking like it's gonna print as a swing low. If this candle stays above that low, then this will officially be a swing low. There will be sell side liquidity resting below that that could be on the agenda short term, right? Reaching for that and then continuing higher. So just different scenarios I have to play out in my head, right? Nothing is guaranteed. The markets are very fluid and there's a lot of uncertainty in the world and things like that. So I'll just flip to SPX and then I'll get to the New York session model setup, and then like I said, we'll end the talking. So just right revisiting the same markup from yesterday, saying that yesterday was a bullish close day. So while I was initially right about it running higher, it did trade lower into this inefficiency one more time. And then ultimately for the rest of the day, it was just a consolidation. But over the evening, we pushed higher and we did take out that high. And then since then, we just been trading lower, even looking to pick up some momentum here. Now, the New York session model. So just seeing like a little bit more details, all that stuff. My buy side liquidity for today, 4205 and a quarter. Sell side liquidity is the low for the week, which it's already engaged. And so this is the part where I go mute. I'll talk to you guys in a second. All right, so this is the sped up part. Please make sure to pause the video if it's too fast to read the notes. Just up there mentioning that on the daily chart, the next trading day begins at 5 p.m. Central. But for me, I'm looking at midnight as the opening of a new day. So technically, on a daily candle, Monday's high was taken out on Tuesday. So that's a run on buy side, a large move down overnight. Sell side for the New York session model has been engaged already by the time the recording started. And so I already mentioned in yesterday's recording what I'm thinking about when that happens. Is it going to continue lower? Is it going to retrace? Or is it going to reverse? Also in the mix there is a potential sideways movement, which would come with retracement possibly. If there's no retracement, then continuation. You have this liquidity line that I'm also keeping in mind, that anyone who uses that concept to trade will most likely have entered sales on that line or be willing to enter sales on that line and placing the stop loss above the highs that tap that line or that are near it. And I'm also shifting back and forth between the other indices and the dollar. I want to see some confluence, some things that are lining up that'll allow for me to have the confidence to take a setup. So the things I was seeing allow for me to feel confident with this expansion higher, leaving this inefficiency here on a 5 minute. After we already took out sell side liquidity, traded above a short term high, that's enough for me to enter a trade, especially considering there's buy side above the liquidity line as well as that yellow shaded area. So I'm looking to see if from that M5 range, if I can get an expansion higher today. So you see I take a paper trade. I also utilize the funded challenge account and I applied a 1/4% risk because I'm still thinking today is low probability. I don't want to risk too much. I'm already up almost 3% on that account. The goal is 8%. So I don't want to jeopardize much of the profit I already have on a low probability trade setup. So that's why I've only applied a 1/4% risk. Dollar was having trouble breaking back below that hourly inefficiency, that brown shaded range. It was finally able to show some weakness through there with the 9 o'clock news that came out. A lot of volatility entered the market. See that 9 a.m. news sent SPX up to that trend line and give a nice rejection. So now that's the third touch on it for a trend line trader. They would be viewing that as the third touch, and a fourth touch typically is taught as will be the break of trend lines usually. But again, I don't subscribe to those beliefs about the market. I'm just thinking from a perspective of liquidity. And so currently the trade is sitting in profit. It has utilized that blue shaded area and has acted as support, but it hasn't really gone anywhere. Typically, I like to see a one tap and go. Not a big fan of price hovering around or moving sideways on those ranges, whether it's for a buy or a sell. And so you can see there it traded below the bottom of the gray shaded area of that risk reward tool. So the trades were stopped out on both the paper trade account and the funded challenge account. So that's minus a quarter of a percent there. So only up about 2.5% now of the 8% that I need. And what I did observe here was how price refused to close below that blue shaded area though. So for me personally, those are things that I'm weighing as far as reasons maybe to get back in. But again, on a low probability day, I don't want to force the issue too much. We'd rather just observe and see how price delivers for the rest of the day. There is news coming out tomorrow in the afternoon that's FOMC related that could be the catalyst for any type of key swing point being created this week. And so, with that though, shout out to the believers. Shout out to all the homies that inspired me to be better each and every day. I'll talk to y'all later. Peace.